Austin, good to see you. A really important topic today. Are you tax ready for retirement? Taxes, of course, don't disappear in retirement as much as we wish they would. In fact, understanding your tax implications becomes even more important. So let's talk through 4 questions that you should ask your advisor before you hang up your hat. The first is, how will my tax situation change once I retire?
Yeah, I think this is one of the biggest misconceptions out there. I think the overarching kind of thought is my taxes have to be lower in retirement. I'm going to be in a lower tax bracket.
You'd
But
hope.
that's not always the case, right?
Right.
We know that's not true depending on where you're pulling money from in retirement, the effects of required minimum distributions. Do you have pensions or annuity income kicking in? All of these different factors go into the equation. So don't make the assumption that just because I'm leaving that W-2 and salary behind, that I'm automatically going to be in a lower tax bracket.
Yes, really important. Next question. Are there strategies to reduce my tax liability in retirement?
Yes, there certainly are. Tax planning does not end once you retire. And in fact, it really is just beginning in a large aspect. So one of my favorites would be a Roth conversion, which is simply taking money from our pre-tax bucket, whether that's an IRA, and converting it to a Roth IRA. We pay taxes purposefully, right, in the year in which we convert, intentionally pay that tax to enjoy that money in the Roth IRA, and it's tax-free from that point forward forever. A second strategy that we really employ quite often here at Patriot Wealth is utilizing what is known as a qualified charitable distribution. So if anybody is giving anyway and has that charitable intent, we often encourage them once they reach age 70 and a half to utilize what is known as a QCD. So take that same amount that you would give anyways and simply give it directly from your IRA to a qualified charity, 501(c)(3), and that is not included in your taxable income in that year.
Mhm. I'm glad you brought up Roth conversions because a lot of people wonder if they should consider a Roth conversion before they stop working.
Yeah, this is kind of a little bit counterintuitive, I would say, to popular advice, because obviously, if we're still working, we have that salary or income to contend with. But there are some advantages to considering a Roth conversion while you're still employed. Number one, the sooner we get this Roth conversion done, the longer we have of that tax-free compounding in the Roth
Mm,
IRA. And second, I would argue this is a really big factor that while you're still employed, you have that income to pay the taxes due on the Roth conversion from an outside source, meaning we
yeah.
don't have to or are not forced to withhold the tax due from the conversion itself. Over time, that can be a big, big benefit to many folks.
And then just to remind everybody watching, we are living in a historically low tax rate right now, so certainly worth your consideration. The last
That's
question comes down to your withdrawal strategy. Austin, I wanted to ask, what are the different tax implications we need to be aware of when withdrawing from our various accounts?
Yeah, I think the first step here, Aaron, is understanding that not all buckets of money are created equal from a tax perspective. So traditionally, we have three kind of buckets of money that we need to consider and be aware of. Number one would be your taxable bucket of money. Think items like a brokerage account, right? Anything that you receive 1099s on. And then we have that tax deferred bucket. This is probably for most folks the largest bucket of money that they have. This is going to be company retirement plans like a 401k, 403b, a traditional IRA, those types of accounts. And then, of course, our favorite bucket of money would be that tax free bucket. That's going to be a Roth IRA, or even municipal bond interest is obviously federally tax free. So just understand that where you pull money from is going to have a large effect on what your tax liability is, right? Am I getting all of my income from a traditional IRA? Well, it's 100% taxable. Or do I have flexibility and tax diversity within my retirement plan to say, I can pull from any one of these three buckets that's greatly going to enhance your plan over the long term?
And those Roth accounts don't have required minimum distributions.
That's right.
Yeah, so much to consider. I think, of course, a Roth conversion may not be right for everyone, but the time to crunch the numbers is now to see if one is right for you. So, Austin, if somebody wants to walk through the math with you, what's the best way to reach you?
Yeah, you can give us a call at 919-322-4113 or send us an email at info@patriotwealthnc.com.
Great. Austin, thank you.
Thanks, Aaron.